Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. And as always, happy Friday, everybody. I hope you're having a great day, bringing that Friday energy to you. It is the third again. We always do 3 episodes on one day. So still the third, still happy New Year's to everyone. I hope you guys are kicking it off with a bang, getting those New Year's resolutions underway. And yeah, I'm excited for this because we got Mark Lumpkin with us on the show. He is a short-term rental guy from STR Cribs. Play on the MTV Cribs there. So I'm super excited to jump into this. Mark has traveled the world staying in short-term rentals, and he has a lot of experience doing this. So I'm excited to hear his wisdom. Mark, thanks for hopping on the show.
Yeah, thanks for having me, Gabe. Always excited to chat with you, and it's cool that we're both from the Pacific Northwest, man. So
yeah,
far away from each
represent.
That's right, man.
All right, man. I told you before we get on here, we always like starting with stories. We like to hear how people got to where they are. Sounds like you got a good story. So why don't you take us to the beginning and tell us how you got here?
Yeah, like the very beginning, I think just like anybody, right out of high school, I just kind of started working random jobs. I ended up in construction as a young guy, just day laborer, picking up trash on job sites. And then you slowly work your way up and learn some skills and make a little more money. And so I had kind of a good foundation in the construction industry from a young age. And then kind of in my mid-20s, I met my wife, and we were both kind of in between jobs. And I had bought a few houses, flipped a few houses, just sold my primary residence. And so I was kind of homeless, for the lack of a better term. And so she's like, hey, we don't really have anything holding us down. Do you want to go do some serious traveling? And I was like, yeah, sure. I've never traveled internationally. Let's do it. And so we embarked on about a year-long trip to about 40 different countries. We had originally thought, kind of like anybody, you kind of romanticize backpacking through Europe. You're thinking, we're going to stay in hostels and we're going to couch surf and we're going to do this really inexpensively. And then we got there and we realized we're like, wow, we're like in our mid-20s. We're not 18 and 19 anymore. And this is actually not as much fun as we thought. And so we had to pivot and shift, right? Our entire mindset of how we were going to travel changed. And we tried hotels and we tried bed and breakfasts. And then we tried Airbnb, and it worked out really, really well. And so we ended up, that was our primary mode of traveling and staying, was Airbnb and VRBO. And after we had done it for a year, I was like, man, this is actually really not that complicated. Like, these people are doing really well for themselves and they're providing something that's cool and unique. Hotels can't compete with them, and this is awesome. So when we came back, we actually dove into the short-term rental space, and that's how I ended up with like my construction background and our traveling background. It just kind of was a perfect fit for me in the short-term rental construction world. So that's the long end of it.
Nice, man. I love it. So you got started in short-term rentals as a consumer. You were out there, you were staying in the rentals, getting the experiences. I'm sure you saw the gamut. You saw the good ones and you saw the bad ones. Before we get into the actual investing, why don't you take us to that year? Give us some highlights. What were the rentals that you were kind of gravitating towards? And then what did you, over time, start to realize was a bad short-term rental? Like, this is not one that you should be going to.
Yeah, I think really the big thing is the mindset of the person that's owning or operating the property. And you can definitely tell a difference. And I listened to quite a few of your episodes. Obviously, you have a very investor-minded demographic of people that are listening, and you guys talk about that. I actually don't think that having your real estate investing cap on is the best way to look at short-term rentals. I think you want to have your hospitality cap on. And so I think of people that like own and operate boutique hotels as really probably being the best ones to invest in short-term rentals, because they're thinking about it through that hospitality lens, not through the real estate investing lens. And so a lot of times people think of short-term rentals as just investing in real estate. And I don't. I think of it as investing in hospitality. And so the people that did really well were those that had the extra touches, the
Mm.
blackout curtains. You wouldn't think that that's important, but when you need to get sleep and you're on a different time zone or you're traveling with little kids, having a room that gets dark is important. That's a very small investment in a property, but if you weren't thinking through your hospitality lens, you wouldn't be thinking about all those little things.
Mm-hmm.
And so,
I,
yeah, I
just
think
a
that's what made
kind
the
of a
biggest
small
difference.
aside is it's funny how, especially even with flips, it is the small things that really can change a person's decision whether to do, to buy the flip or to not really. Like light fixtures. I feel like light fixtures, it's such a small investment. I mean, it's not super cheap, but it is a lot cheaper than other improvements that you can make to the property. But light fixtures can have such a big difference on the aesthetic of a house, of a short-term rental. I mean, you're talking about blackout curtains. That's what, maybe 100, $200
Right.
to an improvement that you can make to this property. So it sounds like it's the small things that really make the difference. The attention to detail on the short-term rentals that you stayed in.
Yeah, you got it perfectly. Well, better said than I had it said. It's the attention to detail, the small little things, thinking about the actual traveler and the person that's staying in your home and what they'll need. And I think a lot of times, if you actually go stay at your properties, you'll find out. If you go spend a week at one of your homes, you're going to realize, oh shoot, I needed to blow dry my hair and I didn't have a hair dryer. Oh, I needed to iron a shirt and I didn't have an iron. All those little tiny things that don't cost a whole lot of money can really create a better experience for your guest and then get you better reviews, more bookings, better optimization in the algorithm on the platforms. So the attention to detail makes a big difference.
And that was actually going to be my next question. I've never owned a short-term rental. We've considered buying short-term rentals in areas that we just want to have a vacation house, but we never actually pulled the trigger. And mostly because I don't want to learn another business. Short-term
Yeah.
rentals, obviously, they are real estate just like everything else. But if you're changing asset classes, I've found you do need to learn that business to get a good return. And I didn't want to learn short-term rentals. But even to today, I still have it in my mind that like one day I'm going to buy a short-term rental. And reviews are one thing that I'm not quite sure. Well, I feel like it's very important to have good reviews. Is that like the thing that can make or break a listing, or what is it that can get you higher occupancy versus lower?
Yeah, reviews are going to be one of the biggest thing. The quantity and the quality of your reviews. It's kind of like a pass-fail grade where you really need the highest reviews possible. And most of your bookings come from platforms like Airbnb and VRBO, and they even reward people that have really high reviews with like being a super host, which we are, me and my wife
Mm.
are, or having a guest favorite house. And so if your property has been favorited by the most amount of people that are raving about your home, they're going to push that to the very top of the list
Mm.
because they don't want to deal with bad properties either, right? It's a very unique business model where they're basically arbitraging your houses, and but their name brand is on it. And so if a guest comes to the platform, books your house, has a bad experience, well, that guest then complains to Airbnb, wants a refund, and then doesn't use Airbnb again. And so they're very much pushing properties that are well received by people.
Do you guys have processes in place to kind of cull good reviews out? Do you reach out to your guests after they stay, ask for a review? How do you make sure that you're getting good reviews?
Definitely. Yeah. We reach out multiple times at the beginning. Yeah, we've got a drip campaign where we sent an introductory message. Here's your information to get checked in. The 24-hour follow up. Hey, how was your check in? Is everything okay? Do you need anything? And my kind of model is we just ask for it. And if you don't ask for it, it's hard to get what you want. And so
Mm-hmm.
we tell them up front, hey, we're hoping you have a 5-star stay when you come stay at our property. And if you aren't having a 5-star stay, let us know. And then we repeat that all throughout the process. Hey, you guys have been here for a week. Are you having a 5-star stay? Hey, thank you for staying with us. We hope we earned a 5-star stay. And so it's just like repetition. And I think it works. We've obviously done really, really well with that.
Yeah. For the guests that don't have a 5-star stay, that have an issue, let's say they have, I mean, I have a toddler. She's almost 2 years now. That's crazy. But blackout curtains are super important for babies because, well, at least for my baby, because if she has any light coming into the room, she will not sleep. And so
Mine too.
if I rented a short-term stay and I didn't have blackout curtains, that would be a problem for me. I mean, I wouldn't leave a negative review, but I can see people out there being kind of peeved about that. So if people are having issues when they're staying at your rentals, and people don't tend to voice their problems unless it's a huge problem. How do you figure out what improvements need to be made to your properties from the customers that are already staying there?
Yeah, I mean, actually, obviously, setting it up on day one, knowing what people are going to have problems with is key. And so you want to kick the property off being well set up. And so that's kind of why I mentioned go stay in your property. You mentioned needing to learn a new business. If you don't want to learn a new business, hire an expert who knows what you should be doing, because they'll tell you, hey, you need this, 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 and this, and this. So setting it up on day one for success is critical. But actually, I've noticed that people are pretty vocal. Like people kind of annoy us, and they'll be like, "Hey, we're short on coffee mugs or whatever," and we usually just take care of them right away. And that's the hospitality piece to it, right? Is like if you're a real estate investor and you were just thinking about that, you're like, "Why are you bugging me? It's 10:30 on a Saturday afternoon. What do you mean, or Saturday morning? What do you mean you need more coffee mugs?" But if you're in the hospitality mindset, like a hotel owner, you'd be like, yeah, of course, we'll send some fresh towels up to you right away. And, oh, you need us to da 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 da. And so we try to jump on things right away. If somebody asks or requests for something that's reasonable, we just do it. Yep, you got it. It's on its way.
How do you like ship them with Amazon? Like, let's use that towel example. Say there were no towels, and these people didn't bring their own, and so they need towels. They call you. It's let's say it's 6 a.m. and they call you.
Yeah.
They need towels. How do you handle that?
Yeah, there's a couple ways. It depends on the market and what infrastructure we've got in place in that market. You can use services like Instacart or Walmart delivery that will usually get stuff out there within just a few hours. A lot of times we have a cleaning crew and a handyman somewhere in the area that can go do small tasks for a relatively low price point. Cleaner, hey, can you go grab some towels? I'll pay you $25 and drop them off at the house. That's usually an option. And then we try to have the home well stocked with what's called an owner's closet and a guest closet. They both have locks on them. The guests don't have access to that guest closet, but it has a lot of extra stuff where if they do reach out and say, hey, we're short on shampoo or we're short on this, we say, no worries. It's already stocked in the house. The code is 1234 to that room, the closet around the corner. Open it up for yourself and you should have everything you need. And so there's a few ways to do that.
It's really smart. Yeah.
Yeah.
Yeah. So you have a backup already there, but it's only accessible when they express the need to access it. You give them the code. They say, okay, great. Thank you.
Exactly. Yeah. Because you don't want them to just have unfettered access to a supply closet full of stuff. Yeah. You're going to get some bad guests. But if someone spills something on a blanket and they need a backup blanket, no worries, guys. We got you. It's in this closet. Here's the code, and there you go.
Yep. Let's talk about finding the deals. That is the beginning of all real estate transaction, is finding that deal that you're going to buy. I see, your background is a pretty nice property in Scottsdale, Arizona. Obviously, it says Scottsdale. It's got, really good aesthetic. I'm sure when you bought it, it didn't look like that. Take us through the process that you use to find the deals, and then how do you envision the change to bring it to the level that you actually need to get it at? What qualifiers do you have?
Yeah, I mean, there's a few things. One is start off with the price to rent ratio. And so I think you've talked to another guy that we've worked with, and he had said something in his podcast that resonates with me. It's kind of that 15 to 20% rule. And so if I buy $1 million property, a house for $1 million, it needs to do $150,000 to $200,000 in revenue. And how I find that out is with several sources. There's AirDNA, there's Rabu, there's some readily accessible softwares that will give you revenue projections and what people are doing in your market. And so I'll look at property, I'll look at markets, I'll look at properties, I will look at the competition. And then if I find a property that hits that mark, that I like the property, I'll then do more of a deep dive to see who's the ceiling and who's the floor. Out of all the 5 bedrooms, 3 bath, 2,000 square feet homes in this market that are within 10 minutes of the beach, how many of them are doing 150 to 200? And then what do those houses look like? How do they operate? And what amenities do they offer? I know that's my North Star. If I need to get that revenue, my house needs to be at least as good as theirs, if not better. And then what's the worst? Okay, there's some homes in this market that are doing really, really bad. Why are they doing bad? And so it's a lot of manual data. There's a lot of work that goes into this. But at the end of the day, if I can find a market that I can rent a house for 15 to 20% of purchase price, and then I look at the best homes in that market and I know, hey, I can do just as good, if not better than them, then that's a market that I'm interested in, a home I'm interested in investing in.
Yeah, that makes a lot of sense. So 15 to 20% is your 1% ratio essentially. When you're doing long-term stays, the golden mean is the 1%. You're saying the gross revenue, right, of the property needs to be 15 to 20% of the purchase price.
Correct.
Yeah.
Because you've got all these additional costs with owning and operating a short-term rental that you wouldn't have with the long-term rental, right?
Yeah.
You've got to handle utilities. You've got to handle broken and damaged items. You've got cleaning fees. You've got your fees to the OTAs. You've got property management. You've got different insurance. There's a gamut of things. It's much more expensive to operate a short-term rental, and so you have to have those different ratios.
I never thought about insurance. That makes a lot of sense. Even when I was looking at properties, I never thought about short-term rental insurance. I'm sure you have to have short-term rental insurance, something like that. Like what is the package that you usually go for?
Yeah, there's a few of them. I mean, you want to cover your items in the house. I mean, your televisions, your furniture, your hot tubs, your pools, things like that. You want to cover. You want to make sure that your homeowner's insurance doesn't screw you. Where if you have to make a claim or somebody does, heaven forbid, burn down your property, and they go, oh no, you weren't within our guidelines. And so yeah, the insurance is key. There's a few great providers out there. I don't have any affiliations with them, but like Proper Insurance focuses on short-term rental insurance, and they give you a lot of different coverage.
Makes sense. You mentioned AirDNA earlier. That is one thing that I love about short-term rentals, and one of the reasons why I was like so drawn to it is there's so much data. So underwriting a deal is a lot easier. You can just pull up any short-term rental out there and figure out what they're making, because everything goes through Airbnb, VRBO, stuff like that. And so I love that the short-term industry has that tool to look it up. I wish RV parks and mobile home parks had that, but it's not the case.
Definitely. It makes it easy for sure. And you can see exactly what they're doing. You get to see their house. You get to see all the pictures of it. And you know if they have a hot tub or they don't have a hot tub. And so there's a lot of data out there. You just have to go through it.
Yep. All right. So we are rounding it down. Before we move over to the quick question round, I do have to ask, for people who want to get involved in short-term rentals, what is the piece of advice that you'd like to leave them with? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Ooh, that's a great question. One piece of advice, I think you actually touched on it, which is make sure before you go in, you consume as much information as you can. You try to learn the industry, and then you lean on the experts to help you. Because just like anything, coming into it, what you don't know will hurt you. And we see a lot of people buy unprofitable properties because they didn't do their due diligence, or they didn't think about insurance, or they didn't think about the regulations or the rules. And so make sure you're doing your due diligence. And if you need help, feel free to reach out to me. They can hit me up on LinkedIn. They can email me. I'm happy to give as much free information as I can.
Perfect. All right, let's move on to the quick question round. It all starts out with education. Could be any form, could be a conference you've gone to, a mentorship program you've been a part of, a book you read, movie you saw, anything. But we need 2 recommendations, one for general life wisdom and then one for real estate.
Okay, general life wisdom is always my recommendation. How to Win Friends and Influence People by Dale Carnegie. Best book out there. And I'm actually going to piggyback on that as well for real estate and give you a audiobook, which is The Richest Man in Babylon. It's entertaining. If you've listened to it on audiobook, the guy has such a great voice, and that would be my recommendation for education. I'm a big believer in books. Obviously, I love podcasts, YouTube videos, all that stuff, but I like a good old book. It's hard to beat.
Nice. Yeah. How to Win Friends and Influence People. That's one of my all-time favorite books. I've never liked the title for some reason. I felt it was a little cheesy, but the content's really good. Really, really good book.
Definitely.
All right. Next question is for your younger self. Let's go back to the Mark who was just getting started out. He was just, setting off on that trip to start with his wife to start looking, around Europe and staying in all those short-term rentals. Go back to him, look him in the eye, give him one piece of advice moving forward.
Buy Bitcoin.
The first person that said that. Good
Am I the
advice.
first person to say that? No. I would just say buy and hold more real estate. Own as much of it as you possibly can all over. And it just seems to keep going up no matter what you do.
Yep. So yeah, every time somebody says that, it's like 90% of the time they say that they wish they got started earlier. We're putting that answer into that bucket. And every time somebody says that, we always point it back to you, the listener. If you have not started in real estate, this is your kick in the pants. Everybody who comes on this show, 90% of them say they wish they got started earlier. So go out there and get something done. It all starts with that first deal. I know it's scary, but you do have to make the leap, get the base knowledge, and then just take action. Just get a deal done. Do a wholesale, do a flip, whatever it is. You will not regret it. So we're moving on. That brings us to the next question on the Bitcoin thing, by the way, just the side note, me and my cousin, when Bitcoin, this was like 2000, I can't remember, 2010, 2011, something like that. I actually don't remember when Bitcoin came out, but at the very beginning, me and my cousin, we started a mining computer and we mined, it was like, I can't remember how many, but it was Ethereum. We mined quite a bit of it. And then we lost the code to access the, the computer. And so we lost all that money and it's still sitting there and we just can't access it. But, and I've lost cryptos is just one of those things. Anyways, side note, moving on to the next.
Yeah, you've heard about the guy who paid for a pizza with like 20 Bitcoin or something.
Yeah, yeah, it's funny. You're the first person to say invest in Bitcoin, but that's a good answer. All right, next question is about the U.S. It's a big place. There is a lot of opportunity out there. This is a good one for you, especially on short-term rentals. Which metro are you most excited about investing in today?
Does it have to be a metro?
It could be anything, state, city, wherever.
I got you. I think that Michigan is for the tourism industry is definitely a hot place.
Okay.
It's underpriced. There's a lot of attractions up there, and I've started to see a trend of people talking about Michigan online. And if you see the photos of like the Great Lakes, they look like in the summertime, like you're in the Caribbean. They're beautiful blue water, and so I do think that, in my opinion, in the short-term rental industry, Michigan is going to be kind of that like next battleground state.
Wow, that was an unexpected answer. Michigan. Okay, cool. Well, there you go. If you guys want to get started with short-term rentals, get out there to Michigan. I'm sure the prices are a lot better than down in Florida too.
The prices are way better. They have great revenue too, and there's no competition. So that's to me, like when I look at those three, I'm like, this is awesome. You've got low prices, you've got no one doing a good job at it, and so when you show up and you're the first one to do a good job, there's quite a bit of reward for you.
Is there a specific area in Michigan that you I can't even think of a single city in Michigan besides Detroit. Is there a city in Michigan that you feel like has more potential than others, or just general Michigan? I'm sure on the
lake.
So
basically the west side of the state, which is on Lake Michigan, you've got like Grand Haven, Union, Pure. You are just a few hours from Chicago, and so there's a huge group of people that vacation there often on the weekends and stuff. And so kind of that southwest side of Michigan, right on Lake Michigan, it seemed to be a really hot tourist spot.
Cool. All right, next question is about finding the deal. It all starts with getting in contact with the seller and penning that purchase agreement. So what is your favorite way to generate leads and find new deals?
Use a realtor.
That is for the longest time, I don't know what my deal was, but I always thought that you couldn't get a deal through a realtor. You had to find them off market. You had to be, hitting the pavement yourself. And once it hit a realtor, then it's not going to be a deal, but that is not the case. Realtors, especially on the commercial side, they will find buyers before they even put it on the market. And I am a huge fan now. I'm glad you said that. Realtors, you guys are out there doing the real work. And so we appreciate you. And that's a good answer.
Yeah, I mean, every good deal I've ever found has come through a friend that was a realtor, right? And you get that phone call and you say, hey, I've got this foreclosure that's coming on the market a couple days. You want to go look at it? The last one was a new construction. We never even thought about new construction. And we got a call from our realtor who said, hey, you weren't looking for this, but I got a builder that's building this house. I think it's actually perfect for what you want. We were able to snatch it up while it was still a foundation. And so, yeah, I love working with realtors.
There you go. All right, next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times a wrench is thrown into the mix and we get to learn a lesson. So what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
I've learned some pretty hard lessons. I'm sure we all have in the real estate space. I think that the lack of due diligence and moving too quickly on a deal has cost me a lot of money in certain deals. And so slowing down, making sure you're checking all the boxes and making sure you're comfortable moving forward and not making emotional purchases, which I've done before. Just, okay, we need a deal. We found this deal. It makes sense. Let's just do it. And let's skip some steps. And that always seems to bite me in the ass.
100%. I will double that. I will, I don't know. I'll raise my hand to that one because I have the same problem. And I'm sure many real investors out there have that same problem, especially when you have a deal drought and you haven't closed something in a while. You can't find a good deal. And you get to a point where you're just like, oh, let's just get something done. Let's just buy this deal. And you really want to rush through it. Don't do it. Do your regular due diligence and stick to your criteria. Never, ever back down from that. Because when you start to make those emotional decisions, that's when things go wrong. So that is it's a good piece of advice, especially for people just getting started out. And that leads us to the second to last question. It does take money to make money in real estate. So what is your favorite way to raise capital?
I haven't done a whole lot of capital raising, to be honest with you. I've had a few deals where we've just partnered with one other person. Those are usually personal relationships. And so I don't have a whole lot of experience raising capital, to be honest with you.
Yeah, there you go. You don't always have to, especially if you have good cash flow and it's coming in, you can still do deals with your own money.
For sure.
And that does lead us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Cool. Yeah. I mean, I would definitely check us out at strcribs.com. You're going to get direct to my calendar, phone number, email, everything's on there. Or you can find me on LinkedIn. I'm pretty active on LinkedIn. And feel free to shoot me a DM. Reach out, ask any questions. I'm happy to connect you with anybody I know in the industry or help out. And we're big fans of trying to give as much value on the front end as we can and hope that maybe down the road you need our services.
Perfect. I'll put that link in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description. In there, you can find Mark's link. All right, man, that wraps it up. Thank you very much for hopping on the show.
Thanks for having me on, Gabe. This is super fun.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.